Good morning. Good morning. How's everybody doing this morning? Awesome. Everybody found somewhere to park? Yeah, we got here last night, was looking around. I was like, yeah, it's not a whole lot of parking spots here. But no, so for everybody that doesn't know me, I'm Johnny Lynum with REI Genius with the boot camp today. I'm so ecstatic to have everybody here. I know we're going to have some other people trickling in that's coming in. That's cool. But I definitely want to be respectful of everyone's time because we got a lot of information, a lot of case studies, and just a lot of wealth building strategies that we're going to go through and give you all, and we want to give time for a little bit of Q&A on the backside to kind of pick our brains. And I'm going to introduce some of the speakers that I brought with me that's in my network that I know they're going to truly bless you guys with the level, at the high level that they operate in their own spaces and with some of the strategies that they're championing in their markets and different markets across the United States. And with all this, that we're definitely bringing to Birmingham. We made a big pivot in my company to buy across the whole state of Alabama last year, and we continue to bring even more investors this year. And how fitting is it to start this year, 2023, here in Birmingham, in this city, in the Magic City, which I'm definitely have grown fond of. We invested here years ago, 2 or 3 years ago, while I'm still military, and we were investing in Virgin. My wife's from here. She's from Center Point here in Birmingham. Her family's been here for a long time. So it's just awesome. And I love the state of Alabama. I'm originally born down south in the sticks, Grove Hill, Alabama, about an hour north of Mobile. And we come a long way. And I got my beautiful sister there helping me as well, too. But yeah, let's get going. So this is the agenda. We started a little bit late, but we're rolling. Introduce myself, start going into some real estate strategies, set the tone for today. We're going to have Reginald Reynolds that's going to come up, talk about investor mindset. We have Savon Williams from Atlanta who's going to be talking about business credit and how you can leverage that to accelerate your growth with your business, your LLC, with your investing. Then we got Gene Boykin, all the way out of Iowa, subject to, he's going to teach you how to become the bank and leveraging this strategy, which I think is going to be the largest strategy going into 2023 with where we are right now, with 85% of the homes that are owned right now having a sub 5% interest rate. So being able to become the bank and take over these existing loans at low interest rates and being able to take those and not have to qualify for loans and take the existing mortgage in place is going to be a great strategy that we can leverage going forward to help homeowners who may be in distress that need our help and need our skill set. We're going to do lunch and do some networking over lunch. Hopefully everybody likes Chick-fil-A. We got Chick-fil-A coming in for lunch. Real estate marketing 101, I'm going to come back and talk at 1, talking about that, a little bit about financing. Then after that, we're going to have my man Tyrone Haggard out of Jackson, Mississippi, who redevelops communities down there. He's doing some really, really high-level stuff there. He's doing 80 to 100 flips a year in Jackson, Mississippi, Clinton, Mississippi, that area, and really transforming communities that he operates in. And then we're going to have a break there, and then we'll have a roundtable session where you all can actually come through. We're going to have some discussions and then have a little time for Q&A where you all just where you are right now, what you need in your business, in your investing, that you can ask your questions, get your questions answered, because the goal today is when you leave out of here, whatever questions you walked in the door with, I want you to walk out of here with answers. Even if we have to sit back a little bit after, it's like, hey, you didn't touch about this, I got this situation, I want to know a little bit more about this, can you help me? That we'll work through and get in. If I don't have the answer, I'll reach in my network and we'll find somebody and follow up with you. That sound like a plan? Everybody good? All right, let's go. Who is Johnny Lynum? So I told you I'm from Lower Alabama, not the LA in California on the West Coast, but down south. Went to the University of Alabama, Roll Tide. Any Auburn fans in here today? There's always one. But no, it's always love. But graduated from University of Alabama with a degree in electrical engineering. Went off to the Air Force. Been doing that for a little bit over 17 and a half years now. Lieutenant Colonel there. Got a little bit over 2 years left and I can retire. And so all of this has been building up, and something that my wife and I, we started from buying our first rental property, 5521 Avenue K over in Inslee. We're buying that first property, $25,000, to now where we closed on 76 units in Montgomery last year in 2022. We partnered up with one of my coaching clients, who's going to be here today, Reggie, with that, and just continue to grow. I'm an acquisition officer by trade with the military. And work intelligence operations as well too. These days I do more management than anything, than get my hands dirty. But I have a diverse background doing a lot of things. At one point in my career, managed a $1.2 billion software development contract working with Raytheon out of Dallas, Texas. And just so that was my pivotal moment for me with seeing all the success and the ability and skill set that I had developed over time. But guess what? Anybody know what type of bonuses you get serving in the military when you save the government millions of dollars? Exactly, nothing. So I was like, okay, hold on. I'm negotiating these contracts. I'm managing these contractors. I'm like, we picked up a couple rentals. I used my VA loan to pick up some foreclosures as we moved around different cities every couple years. And it's like, okay, we can do what these people are doing at HGTV. I manage contractors every day. I can manage contractors that's fixing a house. It's no different. Only thing is, it's my money instead of taxpayers' money. So, you know, the risk factor is a little bit higher there when you start playing with your money. And then especially when you start talking about private investors and where we are now with our company, we're raising private funds and being a great fiduciary of other people's money when you start doing deals. To the point now where we're doing 10 to 12 deals in Panama City virtually. I live in Northern Virginia, been there for about 2 years, and then we're still bound across the state of Alabama as well too virtually. And so just being able to run 2 companies is a tremendous job. But had my beautiful wife, those who've been around, she had to leave early. But Melissa, she's the glue with all this. She keeps everything going. And then our beautiful family there, our kids there, Johnny, Mackenzie, and Jace. And that's why we do this. I'm all about family, about legacy, and building wealth and doing these deals for them. I'm a published author as well too. My book, Millionaire Real Estate Success Strategies, came out December 21. So that was something special during that time to be able to develop that and being able to have something that can help other people do what we're doing today. That was really the precursor for this, because I didn't never set out to write a book, to be coaching, to doing live events like this to help people. But I'm a true believer when you look at the subtitle for my book, what they forgot to teach you in school is that they don't teach this stuff that we're going to be talking about today in school anywhere. And I tell my story in my book about how when I left college and went and did my first job in the Air Force, I had to get a family member to sign my lease to get my first apartment because my credit was screwed up. I didn't know, I was just hanging out like, hey, I got a credit card and go, we can go get some Remy VSOP and get a couple beers and we go party and we're going to roll with the tide and do what we need to do. And so you really weren't thinking about making payments on time and things like that. But it was an area of growth, and I had to grow and had to rebound from that. And fast forward where a good friend of mine 10 months later was like, hey, I found this duplex. I'm going to buy a side. You buy a side. When we leave here, we're going to rent it out. And he had the vision, but luckily I had got myself together, had learned, and I had sought out the information where my credit was in a place where I could use my VA loan and buy that property. And the rest is history. And so that's the reason why we're here today with all of that. Right now, our portfolio is a little bit over 10 million. We got another 20 unit under contract in Montgomery. We're closing in a couple weeks. That's going to bump that up, 110 units. And I'll tell y'all, I grew up running around barefoot, dirt roads down the Grove Hill, and I promise you, if anybody can do it like me, every one of you sitting here can do it. You just got to make a decision, and you just got to start. And it always starts with that first house, that first deal, that first property, and from there, just continue to take action. And there's a couple other things too you mix with it that can get you there a whole lot faster. And we're going to talk about some of those things. Operation Restore is kind of our outward-facing company that helps homeowners, motivated sellers, how we buy properties, how we help the community, Panama City, across the state of Alabama, and across the Southeast. REI Genius LLC. So that is my community. We launched a couple months ago. We did our first virtual event back in November. But this is here. This is today. Teaching, getting out, helping people where they are with building strategies, wherever you are in your journey, with whether you have a lot of time and not a lot of money, or if you have a lot of money and don't have enough time, but helping you come up together with a strategy to build wealth and then accelerating that strategy. I don't want to say 10x it, but we're going to accelerate it to the point where you can go a whole lot faster than what you normally would be able to do, especially by yourself. And that's what it's all about, being able to freedom to enjoy life, whether it's traveling, whether it's going to volunteer at the nonprofit, whether it's building that legacy, for yourself, for your family, for your church family, whatever it is that you want to do. It frees you up the time where you're not working, trading your time for money, where it's working 40, 50 hours a day just to get by, to make 70, 80, 90% of that money going to pay expenses, and then the rest that you're just going through and trying to do whatever you can with it, but being able to just operate and live at an even higher level. But that's me. That's my philosophy, what I stand on, and what we're doing. Now let's start talking real estate. Fix and flips. Who in here has ever done fix and flip? I see a couple operators in here. I see them hands going up. Awesome. So that's one of the things that it's one of the strategies that allows you to be able to build wealth. One of the great strategies that we leverage, we take, because I still work my W-2 job for the military, we leverage the fix and flip strategy to buy real estate, get the profit, then save the profit and buy apartment buildings with it, where you can generate large amounts of passive income monthly, and it allows you to get out that rat race a whole lot faster. Because once you're able to get enough passive income to replace your expenses, then you're good. Everything else is bonus. And that's one of the strategies that we leverage to find properties that need work, where we can come in, add value. We buy them for 50, 60% of what the after repair value will be. Once it's all fixed up, we come in, make the renovations, and usually we end up somewhere around 70 to 75% of the after repair value at the end of the day. And then we sell it. We sell it on the retail market, whether it's MLS, whether we sell it directly without leveraging a realtor. We've done that before, where we list our own properties. We got 2 right now that we self-listed, one in DC and then one in Northern Virginia that we're selling on our own without a realtor representing us, because we've done it enough times, we've seen enough contracts, and we know how to work with the buyer's agent to get it done and save the 3%. So there's different strategies out there. This is one that definitely can be leveraged. You can fix and flip a property, live in it a couple years, sell it, not have to pay taxes if you live in it for at least 2 years, and be able to move on to another house. And a lot of times, there's strategies that we'll talk a little bit deeper on the fix and flip side that you can leverage. But this is a great one that you can go in, and the big piece, and we'll talk about the financing, is usually these fix and flips won't qualify for traditional lending. So hard money lenders, gap lenders, or private lenders, non-traditional banks are a lot of the funding resources, especially when you're starting off for these type of deals. Also, you can leverage fix and flips if you have a retirement account. And that's something that we'll touch on a little bit, where you can self-direct retirement accounts. If you have a 401k that was with a previous employer, you can move that money into a company that allowed you to self-direct into whatever investment that it is that you want to use. And so the biggest thing with that is you can't benefit from that house or that IRA before you turn 59 and a half years old. And so that's another strategy as well too, with how you can find resources. Wholesaling. Who in here has heard of wholesaling? I know that's a popular one. Okay, a few more hands. This one allows you to get in. All you really need is some marketing. And guess what? If you know how to put some sweat in the game, you don't even need a whole lot of money. You can go to the courthouse. You can go and find public information about who's going through evictions, what landlord just had evicted somebody, who's in pre-foreclosure, who just had a divorce, who water just got turned off, who has code violations on their property. All this stuff is free public information. You can go. Birmingham makes it a little bit harder. A lot of it's not online, so you physically have to go to the courthouse and pull the data, but the data's there. And guess what? The harder it is to get that information, guess what? The less people that's going out to get that information. And so that's one of the things that wholesaling, that if you get really, really well at marketing, you can do really good at being able to generate income, whereas that now you can grow or scale into those different strategies from wholesaling, whereas that once you get the capital now, hey, I can start aligning with doing a fix and flip, or I can buy a rental property to hold, or now I can start getting into smaller apartments. And one of the great strategies that I teach with wholesalers is like, hey, if you're controlling deals and people can't find deals, it's like, hey, align yourself with the real estate investor that maybe they won't pay you as much as you want and pay you a little less than what somebody else will pay you, but tell them, hey, I want to get in on this deal while you're going through, and I want you to teach me the rehab process. Leverage the deal, whereas that now whatever you are deficient in, now you have the control of the deal. Get whatever you need out of it. Like, hey, I need some mentorship. I've never done a construction project. It's like, hey, you and him both want this deal. How about if you let me come in and see the renovation process, I'm going to sell it to you. And negotiate it where it's a win-win, where now you get mentorship on the deal that you still made money on too at the same time, and you're getting a free education. So it's different strategies like that with wholesaling, whereas that now it's a means to an end to get through. But wholesaling is really good at finding deals, and then also on the backside having a really good network to sell those deals to other investors, to investors that you know that are buying in the area, that are looking to grow their portfolio, whether they're going to fix and flip it or whether they're going to keep it as a rental property. Now you're in between, you're the middleman, and you're brokering those deals where you can find them, and then you know who wants them on the back end. And so that's one of the great strategies starting off, where if you don't have a lot of money, that you can get in and start controlling deals and start taking action on being able to be the broker between these deals and growing your network. Because I'm a true believer that your network is definitely your network. That the people you surround yourself around, that you're going to be a sum of those, the 5 people you spend the most time around. So if you're in a room with 5 millionaires, guess what? It's more likely that you're going to probably end up somewhere around that same level. And at the same time, if you're spending the majority of your time around people that are not motivated, that aren't taking action, then you're probably going to be the next person that's not going to be motivated. You're going to be complaining. You're not going to be taking action. And so that's the thing, that I'm a true believer that proximity is power. And that as we go through these different strategies, you want to start aligning yourself with like-minded investors, people that's in this room, that's serious, that's showing up for themselves, that's taking time to educate themselves to get to the next level is where you want to be, and being able to grow and go through this journey together with more and more people. So does house hacking. Anybody familiar with house hacking? Okay, still got some good hands. So house hacking is a strategy where is that you're able to live in the house and still produce income. I know, like out on the West Coast, California, they had like the ADUs, was the alternative dwelling units, where they can have like an Airbnb in their backyard, convert a garage to a living dwelling. Or it's the same thing as having an extra bedroom. You rent out a bedroom or rent out your basement in your property. Whereas that now you're able to generate income while you're living there that's going to offset your mortgage payment, offset your expenses that you have for the property. So there's a whole lot of strategies with Airbnb. Some people rent out their whole house. It's like, hey, when they get a booking, they just leave and go get a hotel room, or they go on a trip or do whatever and just rent their whole house out, or they rent it out by the room just as people go through. So this is a great strategy, and it's very dependent on locations. Some locations are better than others. If you got a place that's right close to the stadium, hey, during soccer season, you're gonna be doing well. As people coming in the city and traveling, you got a proximity where they can walk to shopping, restaurants, attractive locations for tourists. Another great one's like Orlando. Like, you have a lot of Airbnbs in those areas. One of the risk areas with that, on the Airbnb side, we won't talk about that strategy specifically, is just where seasonality or something goes, or the rules that the cities make can dictate, hey, you can't rent in this area. We look at a couple of properties in Panama City Beach, great deals, but the homeowners association said they're not allowing any short-term rentals in the neighborhood. And it's like, okay, well, that kills the deal, because you really can't get a strategy where you can increase income. But with house hacking, one of the great ones is being able to buy multi-units. So duplexes, triplexes, quadplexes, all these, all the way up to 4 units. You can use a traditional residential loan, whether VA loan, FHA, or conventional, or USDA, that you can use these residential loan products to go all the way up to a 4 unit. So instead of just getting a single family home, you can buy a 4-plex and be able to leverage this, where now you have 3 tenants from day one. You're an instant landlord. You live in a unit for at least a year, and you can move out after a year. But as long as you live in it before, you can leverage these loan products that don't require a whole lot of money down. So when you start talking about FHA 3.5%, conventional 5%, that you don't have to VA, no money down, that you can get into some of these units, and you can become an instant landlord from day one and leverage this strategy. And then look from there with pivoting out. It's like, okay, I can use this loan product for a year, and then I can find how I can move it to another deal. If I got enough equity, then also for the credit's still good and your debt to income's low, you can still potentially qualify based off your income to get another property. And so it's just strategies like that allow you to generate income while you're still living there, versus you just paying all the expenses and not leveraging the asset to generate more income. So that's definitely a great strategy to get started as a landlord. Anybody here ever house hacked before? Okay. Oh, I see some hands. Perfect. And that's one of the great things with it, is like, once you get this information and start to get the creativity going with the different ideas of things that people have leveraged and done, that now it's like, okay, how can I take this and apply it to my life, my situation, and what I want to do with my goals? It's like, okay, now that I got this information, now how can I take action and go and leverage it now, moving out and going forward? Live in, then rent. This is one that we've done multiple times with just the nature of my job, having to move around, whereas that you live in it for a while, and then you move out and rent it. And it's the same thing, you can leverage with house hacking. If you own a fourplex, you live in one unit, and you can leave the next year, and then now you rent it out, rent that unit out. In the same way with this, you can buy foreclosures. I've lived in foreclosures that we bought. Then once we move and relocate from the area, then guess what? Then now it's returned into a traditional rental property. And so that's one of the strategies that you can leverage, because a lot of people, they move up housing, a lot of people, when you buy your first starter home, that is not necessarily the house that you're going to live in the next 15, 20 years from now. You're not going to probably still be in that house. So, having that strategy, when you're buying, looking at, hey, okay, what are the rental rates in this area before I buy? Is it a great school district? How's crime? Things like that a buyer is looking for in those areas, because you can attract really great renters when you get ready to rent the property out. So if you can look at that and the house is like, okay, well, if we buy a 2,500 square foot house, what's the max that we can rent? If we only can rent it over here for $1,500, but if we buy a 2,500 square foot house on the other side of town, we may have to pay a little bit more, but the rent's like $1,000 more because it's has a perfect school district. So things like that, when you're buying, to kind of think 5 years, 10 years down the road, what's your true long-term goal, and align what you're doing today, your actions, the purchases that you're doing today, where you can go in and think down the road, like, hey, I can convert this into a rental property, or I can convert it into a duplex, or I can Airbnb it, or whatever it is. Because when you say rental, you can do long-term or short-term rentals. So you have a lot of those options that you can leverage. And the great part is you're using some of these residential loan products that don't require a whole lot of money out of pocket up front, compared to a traditional investment property where you're going to have to put 20 to 25% down up front. Live in, flip, same thing, fix it up and live in it. So we talked a little bit about, living in the property instead of renting it. Now you're going to flip it. And so the thing is, for tax purposes, you want to live in it for at least 2 years. If you live in it for at least 2 years, if you're single, you can get up to $250,000 sheltered away from the IRS. If you can make up to $250K, they're not going to tax it. And if you're married, you can go all the way up to $500,000 as a married couple, as long as you live in it for 2 years to sell it. So if you find a really great fixer-upper, move in it, fix it up, and then sell it in a couple years, and boom, you don't have to worry about paying taxes on that income. And that's one of a lot of strategies. I know people that move around and they just do it every couple of years. They found a flip, and they're not necessarily worried about, school districts and things like that. So they find a property, fix it up, and they know they can make the profit on a couple of years and sell it. And so that's a strategy. And they have to avoid taxes, because the biggest thing is, if you make $500,000 and you're in a 30% tax bracket, 30% of that you're gonna have to pay. That's $150,000 you got to pay to the IRS. So if you can avoid paying $150,000 and you're 30, 35 years old, and you reinvest that money and you can grow it for 20 years, that's a lot of money that you're able to save by being able to keep that in your pocket, and you do something with it versus Uncle Sam trying to do something with it. Because how many people in here think they can do a better job than the government with your money that you didn't work hard to earn? Exactly. We ain't trying to give them nothing. Bird strap. How many people in here bird a house? Okay. I know he look at. We got a couple of investors in here, high-level investors that's doing this strategy. This is one of the best strategies to build wealth, because you're able to, the money that you're able to put in up front, you're able to extract this money out and still own the deal. With this strategy, essentially, it's a flip. You go through, you find a house that needs work, and then from there, you put the work in it, but instead of selling it and flipping it, you go to the bank that you built a relationship with, local bank, community bank, credit union, and you tell them, hey, I want to keep this and refinance my short-term loan, whether I went through a private lender, a hard money lender, or you borrowed money from somebody else's self-directed IRA to do the renovations and purchase the house, and now you go and just refinance the property. And normally they'll refinance it at 75% of the new value or 80% of the new value. And guess what? If we did the math and we kept to our numbers when we did the same thing that we do with a flip, we're all in on the deal, 75%. So guess what? If you get a 75% loan and you only spent 70% of the after repair value, you're gonna get 5% back at closing. that literally you do a deal, fix it up over 2 months and refinance it, and you get paid at the closing table, get all your money back to deal, pay off your short-term loan that you had, and you now it's renting out. You're bringing in whatever, $500-$600 a month cash flow, and you got no money in the deal, and you still had 25% equity left. And so that's the powerful strategy, where is that once you can find these deals, and if you do 4 deals a year, and if you say just you got a $100,000 house, and you got a 75% loan, now you got $25,000 in each house that you buy. If you do this 3-4 times a year, that's $75,000 to $100,000 of equity that you built up in 1 year with no money left in the deal. And that's equity and that's wealth that you're building up over time. And guess what? You keep doing that 5-7 years from now, and if you're doing, we'll say you do 2 deals a year for 7 years, that's 14 houses. And then guess what? After you get to year 5, the ones that you bought in year 1, you go and refinance that one. Then in year 6, the one you bought in year 2, you go refinance that one. And you just stagger it. And that's one of the strategies that a lot of the wealthy use. They use it for apartment building. Because as they go through, because rents are going up, the Fed says they want to keep inflation at 2%. So in 10 years, your money is going to be worth 20% less. If they keep it at 2%, they want to keep it at 2%, but right now it's at 7%. So if they don't get inflation down, 10 years, your money is going to be worth 70% less. And guess what? Real estate is going to be costing 50 to 70% more. Y'all see that relationship with the inflation and how you're losing buying power? And by owning assets, it takes more of those dollars that's worthless to buy your real estate, to buy your assets that you own. And so that's just one of the strategies where you can get in and pull all your money out of these houses. And then over time, as they go up in value and they're paying, your tenants and your residents are paying down your mortgage, you're getting depreciation, that's taking money off taxes that you have to pay, and they're paying down the mortgage, and it's going up in value over time. And that's why real estate is a great hedge for inflation. And you see a lot of these hedge funds and Wall Street money managers that had billions of dollars. Why, when we had the CARES Act with COVID, and they printed all this money, they printed 50% of all. So but for pre-COVID, however many trillions and trillions of dollars were in circulation, they printed half of that amount in less than 2 years. So they a 50% increase in the amount of money of the US dollars that were floating around. And so that's why you had all these Wall Street hedge funds and everybody, they started buying real estate because they already know if you put this much money into circulation that everything's gonna go up. Debt was cheap. You could buy a house and get a 2% interest rate if you bought the rate down. It was crazy. So they already knew what was going to happen with all this money being in there. The inflation was going to shoot up. And so what do? They started buying real estate everywhere, buying houses by the hundreds. In cities like Boise, Phoenix, Austin, and areas like that. Atlanta was a big one where you had a lot of the iBuyers, Open Door, Zillow, where they were buying these houses because guess what? The money they were borrowing on Wall Street, they weren't paying but 2-3% interest on it. And so now they can go buy it and they know they're going to make 10-12% return on the rent that they were getting. And so that's the game that they're playing at a really, really high level. And so that's with the BRRRR strategy that allows you to take these houses, but instead of flipping them and then having to worry about paying the taxes because you owned it less than a year, now you're adding this to your portfolio. And this is how you build wealth and start building wealth at a fast level. Because if you can really get good at finding deals or align yourself with a partner that can find deals off market, and you're able to turn these houses over, that you can build wealth fast. You just do this 5 years. You buy 4 houses a year for 5 years. That's 20 houses. And if you got 20 houses and you're making $400 a house, that's what, $8,000? And all those mortgages are being paid down each month. You're getting equity, all the depreciation for the write-offs. I think for the apartments that we bought this year, we did a cost segregation study, and I think we're going to have a depreciation loss on paper between $800,000 and $900,000 for the investors. It's like 5 of us in the deal that we're going to split up. And guess what? That's how Donald Trump doesn't have to worry about paying taxes, because he owns a lot of real estate. And they own their partners in these deals. They own skyscrapers and all these commercial buildings where all this depreciation and everything, that it's a loss. And then when they sell it and they try to recoup and charge the taxes, they just go buy another piece of asset with it, and then they don't have to worry about it because it's deferred. And then they just defer it property to property to property. Sell a property 20 years later, then move it, and you go buy another. And you don't have to worry about paying taxes. And that's how they build wealth over time, whereas that you can defer all those taxes, and then once you get down the line and you pass away, you send a trust, the trust owns it, It's no taxable event, and the family just owns it and keeps on going and keeps on trucking. And so that's the thing that we're talking about with these different strategies we're getting these properties. So we got short-term buy and hold rentals, Airbnbs. You can partner a lot of them. When you say short-term, you can do like 30 days or like extended stay with like nurses, traveling nurses use a lot of these, where you have companies that'll bring people in, like they're working only 3 months in an area and they rather have a house than be in a hotel for 3 months. And so they're looking for like a short-term rental where they might not be in there just for day-to-day, for a couple of days in for the weekend type of strategy. But this is a great one that you can use for single family, also for apartments. That we're looking at some of our, taking a subset of our units and just leveraging them as short-term rentals for people coming in the area that's looking for something that's already set up, has furniture, it's furnished and everything, and they can come in and they don't have to worry about checking in a hotel and elevators and all that stuff. And do that. So there's a great way to increase your cash flow just with short-term rentals and kind of diversify. Because with all this stuff, there's multiple strategies that you can leverage, and you don't have to just pick one. I say get really good at one and then start leveraging others. Whereas that you can go deep, and once you figure out that, you get your systems in place, you get really comfortable with it. It's like, okay, now I'm really good at fixing flipping. I'm keeping some, like every third, fourth house I'm burning and keeping it in my portfolio. And now we're going through, I feel really good. We got a good team, good system. Let's start taking some of this profit that's set aside. We're gonna start buying apartment buildings. We start with small apartment buildings, then we're gonna move into larger apartment buildings. And it just kind of dovetails, and you continue to grow and build your network and build your portfolio up over time. And then 20, 30 years from now, you look up, like, man, we got 20 single family houses and we got like 50 apartment units, and and we made it happen. And so, and that's the thing that you do. So kind of think through some of these different strategies, what fits with what you do, because all this stuff you want to be consistent. Whatever you choose to do, you're gonna have to be consistent at it. And so figuring out the pieces of it, we're gonna talk about some of the marketing strategies, like, hey, who are these people that are selling houses for 50% on the dollar? It's like, okay, man, I can't go buy a house for $50,000. Yes, you can. And there's people out here that are investors. You know, we had a workshop last week where we had a guy coming in talking about how he works strictly with just tired landlords. He goes and pulls eviction records. He calls these people up on the phone, and he's across the state. He calls his market is Tulsa, and I think he's based out of the Atlanta area. And so that's his area that he works. He just calls them, gets the deal, negotiates on contract, pays somebody to go walk it for him, gets the video, the pictures, and negotiate seller finance a deal with a lot of them. Then he don't have to bring money to the deal because they're so done and frustrated. They're like, hey, I own it free and clear. You come in and take it, because they haven't been getting paid. They're like, hey, I'll come in, I'll pay you $800 a month. I know I can rent it for $1,500. I'm gonna have to put $5,000 in it, and they're happy. And a lot of times, like, hey, I'm gonna pay you $700 a month. They don't even ask about the interest rate. They just like, hey, it's income. You're gonna pay it, like, boom, and it's fine. So you're completely limitless when it comes to real estate and the creativity that you can bring into all these deals. Long-term buy and hold rentals, it's a traditional way of buying it. You just buy rental properties, or you rent them, you hold them long-term. You know, somebody comes in, they sign at least a 1-year lease, or you may do a 2 or 3 year lease for a property, and you go through, and they call it mailbox money. It's slow. It comes in month to month, but you build wealth over time. This is a marathon. It's not a get rich quick at all. But the faster that you can do it, the faster that you can get there with doing it, with being able to get really good and putting systems in place to get those deals. And we talk about the rental income, the tax shelter from depreciation, whereas that now you can offset income and not have to pay taxes on a lot of this money. And then just over time, that real estate goes up. Because if you look at houses in the 70s, in the 80s, they were a little bit more expensive. In the 90s, they were a little bit more expensive. 2000s, they were a little bit more expensive. And you look at it now, it's like, okay, houses that were $70,000, $80,000 in the 70s, they're like, $800,000, $900,000 now. So it's just over time that real estate is going up. And we talk about that, it's just after we went off the backing of gold for the dollar in the early 70s, it's like inflation's been killing and eroding the buying power of the dollar. And so that's why it's super important to just know with inflation and how to hedge the inflation. In real estate, it's not the only asset class out there. There's great other ways to build businesses and other asset classes that are a hedge, but real estate has definitely been one of the most tried and true over the last few centuries for us being able to build wealth. And there are a lot of millionaires and billionaires that at some point, and that they keep their wealth through real estate and build it up. Snowball plan. So buy rentals, pay them off over time. You know, as you're paying them off, you figure out like, hey, I'm gonna pay this one off first. All the extra cash flow, I don't need it right now. I'm putting all my extra capital into paying the first one off. Guess what? Now all that income, that $800, $700 coming in from that rental, now all that money is paid off. Now all my money is going to pay off the second one and then the third one. And so with that, you're able to build wealth. And a lot of people, you're like, oh, I don't want apartments. I don't want 30, 40 houses. I want to get my 10 houses and I want to pay them all off over the next 10 years. And so you pay one off, and then it's just the snowball effect. Dave Ramsey is really big with this, with like credit cards and paying off debt, with being able to have a snowball effect. As you're able to just go through, pay off the highest interest rate card, then the next one, and just build momentum as you go. And next thing you know, you're halfway through paying off the 10, now you got 5 you own free and clear, and all the cash flow from those 5 rentals is all going to pay off the 6. And then everything from the 6 is going to pay off the 7th and so forth. And now you're able to build wealth and accelerate it. Because I'll tell you that, if you do this, that you don't have to have a grand portfolio. A lot, are you guys familiar with Grant Cardone? He buys he owns thousands of units and everything. It's like that. That's not for everybody. And so that's the thing that you got to figure out. What's your goal? How much passive income do you need? Is it $5,000 a month? Is it $10,000, $15,000, $20,000? Just figure out whatever it is. And then from there, like, hey, in Birmingham, I know I can easily get conservatively $400 cash flow a month. I'm like, okay, cool. All right, how many of these $400 houses that I'm getting this cash flow, how many of them do I need to get to my number? And start thinking, it's like, okay, how fast do you need to get to that number? Is it 10 years? If you need 10 houses in 10 years, then you just need to buy 1 house a year. What does that look like? Is that, talking to 5 wholesalers once a month, getting on their email list, calling 5 realtors a month to just see what they got coming up on market to get that one deal? Or, maybe it's 20 houses. Like, okay, I need to buy 2 a year. And okay, what strategy will get me there? But it's like, okay, I need $40,000 a month. Okay, well, you probably need to start looking at apartments. You need to start looking at different levels of scale, because if you want to get from here to California, there's many ways you can get there. You can get there by train, you can get there by plane, you can get there by car. It's like, okay, if you need to get there tomorrow, the only way you're going to get there is on the plane. So you need to get there faster. You need to probably use an apartment vehicle if you need to get there to get to your cash flow number faster. But if you got 20 years to get there, it's like, okay, we may jump in an RV. We may go stay in Detroit for a year or two, go here. We're going to go to the Midwest, stop there, go stop at the Grand Canyon. And then we're going to get there in 10 years or whatever. But, you just got to look at the vehicle that you want to use, the strategy that you want to use to get you to your goal fast as possible. And what I want to say fast as possible, to get there when you want to get there. And so you can start with single family, but you don't have to end with single family. And that's okay. Trade up plan, sell stuff. And so you buy single families, you start buying apartments. You start buying retail commercial. You start buying buildings like the building we're in right now that you can lease out. Just where you're buying assets and trading up. One of the things that I do, I just sold a couple of houses that I've had. My first house that I bought in 06 in Warner Robins, Georgia, I just sold it because I'm coming up on the 15-year mark. And with military, that we talked about that 5 years of ownership, with military, they take it out to 15 years. So I had a lot of trapped equity in there over years. We're paying it down. The roof, we're going to have to replace the roof in a couple of years. We're going to have to replace the HVAC in a couple of years. The carpet's never been replaced. And I left there in 2010. I've never been back inside since then. And so I was like, okay, this is the perfect time to sell. Let's go ahead and sell. We won't have to pay taxes on the money because it's I lived in it 2 years. Within the last 15, I can avoid taxes. And that's the thing. It was like, okay, now let's go ahead and sell that asset, take that $50,000, $60,000 out of there that's left, that equity, and put into another deal, because we're going to just buy a roof, we're going to buy HVAC, carpet, all that stuff, remodel in the next 2-3 years. And if we sell any time after this, we're going to pay taxes on it. So it's just being able to trade up, take that, and then go buy another asset, put it into a apartment deal, and do that. And so that's one of the big ones with the trade up plan. 1031 exchange is that vehicle where you can avoid paying taxes, whether it's single family, apartment. When I was talking about Trump and how they do that tax-free strategy, like they sell the asset, they put in a 1031 exchange, you got identified, I think, in 45 days, and then you have 180 days to close on the deal. Once you identify, I think you have to identify, you can identify like 3 or maybe 5 assets, and then you got to close on something to give you time to close. But you're allowed to avoid taxes that way, and just roll into bigger deals. Hard money lending, It's just, we'll talk a little bit more about the financing, but that's just non-traditional banks giving you money to do deals. The interest rate's a little bit higher, but you don't hold a loan for that long. Usually it's 6-month, 9-month, or 12-month term. One of my hard money lenders, like for apartment buildings, we'll take money out for 18 months. So, but it's all relationship based. You have different lenders, they have different loan products that you can leverage in order to get to whatever it is that you're trying to do. And so a great strategy, there are a lot of local lenders. That's one of the things that we're doing this year, is making a lot of relationships here in the local area as we do more deals and want to hold more deals. With the BRRRR strategy or buying and refinancing these properties, you got to have different banks on your team, because each one, they have different tolerances, they have different limits that you can have in there. Within their bank, they only lend you $4 million to your company. I was talking to a guy in a mastermind event that I was at yesterday in Florida. He was like, well, he's got a bank that their limit is $25 million. He's tapped them out. So he's like, okay, the most they'll give me is $25 million. I'm like, well, that's a good problem to have. If somebody say they don't want to give you more than $25 million at that point. But so that's the thing with just having different relationships, and also with that saying, being in circles and rooms with people that's operating at a higher level as well too, where it's like, okay, hey, what's that guy's number that's lending you up to $25 million? I want to talk to him, with those things. But that's what it's all about, with being in the right community, in the right circles, because you get information that you don't have. And everything that you want in your life and that you don't have today is somebody that you don't know right now that has it. And so your job, you just got to figure out who it is. It could be somebody in this room. It's a relationship in this room right now that can help you go to the next level. So that's one of the things with the networking lunch, hey, meet your neighbor, the person on the left and right, see what they're doing, what they're into, that you never know where partnerships can get made, and can take your business and your investing in your portfolio to the next level. Syndications is a great model. They use it for apartments. Anybody know what the most famous syndication is right now in the United States? It goes back, but the Empire State Building was a syndication. I think the lowest contribution was like $10,000. But all it is just pooling money together. You have a group, general partners that own it, that manage the deal, they operate the deal, and then you have limited partners who are the investors that bring money into the deal and they get a return. They get a preferred return. They get equity on the backside whenever they sell, whenever you refinance. That's all the syndication is. You have a group of guys that come together, they operate the deal, they find the deal, they get to find the financing. They may have a key sponsor that has the net worth that can sign on the deal because of the value of the apartment or the commercial building. That's usually what you're going to buy, syndication, stuff that costs a lot more money. And then you just pool in investors' money. And you have an operating agreement, you have a subscription agreement on like, hey, this is what's going on. You have a private placement memorandum that lays out all the risks for the deal, what could go wrong, what could happen, what's the expectations for the deal, and you go into it. A lot of times this is reserved for like accredited investors, sophisticated investors that have like a net worth of $1 million, or they make at least $250,000 a year. And so, but a lot of things have changed over time, over the last few years. I think it was Obama passed a law in 2013 when the law passed with the Blue Skies law, but it allows you where people can, like, you see people raise money on social media now. You can get in a deal for like $5,000. You can do like crowdfunding, those type of things. It's all syndication where you pool money together to buy assets and operate. One of the big things with that, you got to know your operator. Make sure that the person that's operating, that's doing the deal, that's sponsoring the deal, they know what they're doing. They got a track record. Do your due diligence before you give your money to anybody. Make sure that the person knows what they're doing. They have experience in that area, and they have a business plan, and that you feel comfortable with it. Because a lot of the syndications, when I look at deals that people are looking like, hey, I want you to partner with me and put money in my deal, it's like, I don't know. Because it all comes down to the individual. How much faith do you have in the individual to be able to operate? Have they done it before? And have they been successful at it? So that's the way to do it. I love joint ventures, where it's that you just pool your money with a small amount of people, and everybody has a role in the company, and it's 4 or 5 people. Usually syndication, you may have anywhere from 20 or 30 people, or you may have hundreds of people, just depending on how big the deal is. One of the strategies that we leverage, we look at like apartments, 40 units and below, and we just align with, hey, 4 or 5 people that want to hold long term, that like cash flow. We'll refinance and get like half our money back in 2 or 3 years, and then we'll continue to get like an 8 to 10% return on our money. going in the future. And then, 5-10 years from now, we'll refinance again, and based on our ownership. Everybody else, we'll get another big check, and we'll continue to get our cash flow as we own it, as rents go up, and reinvest some money in the property over time. So joint ventures is a great way to build wealth too. So that's it. So those are some of the strategies I want to tee up to you guys to kind of be thinking like, hey, I like this, I like that as you go through. And we're going to have some different strategies. We're going to talk about the subject to piece. But right now, we got Reginald Reynolds coming up. I met this guy last year, the beginning of this year, almost this time last year. We were in the same mastermind group down in Atlanta with the morning meetup. It's kind of set up for entrepreneurs. And I had joined because I was like, hey, I need to do more professional development on the entrepreneurial side and continue to kind of pivot as I was going into 2022. That's one of the things. I just wrote my book. It's like, okay, I got to get better at marketing. I got to get better at social media and doing some other things. So I joined the morning meetup, kind of see how people run in communities, things like that. And then I saw his YouTube channel and podcast. And I was like, okay, one of my goals was to get on more podcasts and meet people. So I reached out to him, and I had no idea that he was from Birmingham. I'm like, oh, cool, it's Birmingham. And he was like, hey, we'd love to have you on the podcast. And I was like, but I do all my podcasts in person. I was like, okay. So I'm in Virginia. So I was like, it's cool. It's Birmingham. It's home. I'm like, I'll come on down. And so I flew down, met him, and he joined my coaching program. And 96 units later for his department, he got his first flip under contract in 10 days in January, closed on that deal. He'll talk a little bit about that, Operation Magic City. And we sold that property to a hedge fund in like less than 90 days. We did that remodel. He's picked up a couple rental properties, found the apartment units down in Montgomery. He's just been killing it, taking action, and he can tell you the rest, with leaving his job, as an officer and all that stuff. So I guess in church they say, I'm gonna let him come in his own way. So come on up, man.